Hi, and welcome to another video by me, Matthew Russell, Managing Partner of Woods Russell, Accounting Business and Tax Specialists. In this video I want to go through 10 tax saving tips with you. This is mainly aimed at small and micro businesses as well as sole traders, but yeah, I'm going to give you 3 very helpful and quick tax saving tips that hopefully after watching this video you can go away with a few new ideas about how to save yourself some more money. So let's begin. Number 1, record your expenses correctly. This may sound obvious, but it's by far the most important one. If you're not recording your expenses properly, how can you justify to the taxman that you should be able to have that tax deductible expense? So that's the first one. Make sure you record your expenses correctly. Number 2, and this is relevant if you're the owner-manager of a limited company, and that's make sure that the phones or mobile phone contracts are in the company name. If the mobile phone or your mobile phone contract is in the company name, all of the expenses of that phone are tax deductible. If they're not in the company name, then you have to apportion it for private usage. So that's number 2. Make sure the mobile phone contract is in the limited company name. Make use of your interest allowances. Depending on whether you're a basic rate or high rate taxpayer, you may have an interest allowance of £1,000 or £500. You may actually even have an interest allowance of £5,000. Now that means you can earn this amount of interest income tax-free. You need to make use of that interest allowance. If you have a limited company, you can do this, for example, by charging interest on your director's loan. That's number 3. Make use of your interest allowances. Number 4 is everyone's favourite topic, pensions. But pensions can be a really great way of taking money out of a limited company. Not only do you take the pension payment, but also you get to reduce the company's profits and reduce the corporation tax that's paid. So pensions should really be looked into as a real tax advantageous way of taking money out of your company. Often with tax, timing is everything, and that's particularly true with asset purchases. If you're thinking that you need to buy a big piece of machinery for your company or business, make sure you look at when your year end is and when the tax year end is, because it may make sense to bring that purchase forward a few months if it means that you get the tax deduction in that tax year, rather than having to wait a whole further 12 months to get the tax deduction. So that's it. Make sure you look at the timing of your asset purchases, number 5. Number 6 is key if you're the owner and shareholder of a limited company, and that's your remuneration mix, or that is how you pay yourself from your limited company. That is absolutely key, and it's one of the key things that accountants and tax advisors look at when finding the most tax efficient way to draw money out of a company. You can pay yourself from a limited company in various ways, through a salary, dividends, pension, interest, and depending on your personal circumstances, about getting the mix right for you and getting the maximum amount of tax-free money out of that company. So that's it. Number 6, remuneration mix. Number 7, make sure you maximise your £5,000 dividend allowance. Now everyone has a £5,000 dividend allowance, so it makes sense if you have a limited company to make sure that you're paying yourself at least £5,000 of dividends every tax year. Did you know HMRC gives you an allowable claim of £4 a week for using your home as an office? If it's relevant for you, make sure you get that in your accounts, as that can be a great way of reducing a little bit of profit and saving some tax. Number 9 is check your tax code. Very simple but very effective. This is probably more relevant if you're not doing a self-assessment tax return, but you should really make sure you're checking the tax code that you get from HMRC, as it can save you some serious cash flow in tax terms. Number 10, my favourite, get yourself a great accountant or tax advisor. Of course I would say this, but seriously, getting yourself a great accountant or tax advisor can be a great way to save money in the long run, and they can really make sure that they're giving you specific advice tailored to your personal circumstances to save you the most amount of tax. So that's number 10. Get yourself a good accountant or tax advisor. And that's it, my top 10 tax saving tips. If any of those are relevant to you, if you have any questions about those, please feel free to drop me an email and I'll be happy to discuss your personal situation. My email address is matt@woodsrussell.co.uk. I hope you enjoyed this video and I hope it saved you a bit of money as well. Thank you very much.